The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, folks. This is Jacob Shube filling in for Tommy O'Brien. I will be with you for the rest of the week as well. So, what's the news is that CPI was higher than anticipated. Okay, and we're still off that 2% target year over year, which is what the Fed's looking for. Okay, so what does that mean, right? I think the major thing is that there is going to be a question of how many rate cuts we are going to get this year. In my opinion, I think this market, of course, does want a higher price. I don't know of any market in time that doesn't, right? In the sense that you have people who want these rates to come down, so capital's cheaper, and then people can make money. But I think the reality of the situation here, and we'll probably hear this from the Fed in the next meeting, is that things are hazier than anticipated. The future is hazier than anticipated. On our TikTok, which is Tiger Trading Labs, if you guys want to follow that, I don't know how many people like TikTok. Regardless, I speak about this a lot, right? Anyways, let's take a look at what we got going on. We will look at the CPI from the BLS website as well. Currently, we're pre-market right now, 907. We're down about 1.4% in the ES Mini, down about 3% nearly in the Russell, 1.5 in the NQs, YM down 1.2%. The gold contract, we're off a little bit today, trading down about 0.45%. Silver still up, interesting for the market there. What I see here on my watch list is essentially we're red entirely except for the things we don't really want red, which is going to be oil, right? So we're at 85.76 with that, the Brent, whatever, at 90, hovering around there. And the dollar is up right now at 104.86. I anticipate the dollar going higher today, and we might at some point soon crack that 105 level. Regardless, this is it's not great news. I mean, it's not terrible or anything like that, but I mean, you're seeing like some pretty, decent downward movement prior to the market. So we'll have to wait what happens at 9:30. Of course, this market is want to just switch everything up, but let's take a look. We have Meta down 1.6 right now. We have Disney off 1.42%. Obviously, the SPY, we were just talking about the ES Mini, Tesla down nearly 2%. We have rates going higher in the bonds, higher yields, lower prices here. Anyways, let's take a look right now what we have going on in the CPI. I'll pull over the BLS charts right now. So let's just read through this together. Consumer Price Index for all urban consumers increased 0.4% in March on a seasonally adjusted basis, as the same increase as in February. And the U.S. Bureau of Labor Statistics reported today, over the last 12 months, that all items index increased 3.5 before the seasonal adjustment. The index for shelter rose in March, as did the index for gasoline. This is one thing we were all looking at and we knew was going to happen. Combined, these two indices contributed over half of the monthly increase in the index for all items, very intense, right? The energy index rose 1.1% over the month. The food index rose 0.1% in March. And the food at home index was unchanged, while the food away from home index rose 0.3% over the month. The index for all items, less food and energy, rose 0.4% in March, as it did in each of the two preceding months. Indices which increased in March include shelter, motor vehicle insurance, medical care, apparel, and personal care. The indices for used cars and trucks, recreation, and new vehicles were among those that decreased over a month. This is interesting, too, with the new vehicles. The all items index rose 3.5% over the 12 months ending in March, a larger increase than the 3.2% increase for the 12 months ending in February. The all items less food and energy index rose, and this is the volatile CPI index, rose 3.8% over the last 12 months. The energy index increased 2.1%, and the first 12-month increase in that index since the period ending in February 2023. Intense to look at. The food index increased 2.2% over the last year. Okay, so we have all items, some here are 3.5. We can see here food as well. This is the unadjusted 12-month. We see food at 2.2% increase. Food at home is actually increasing. Food away from home, really, And this is the 12-month, 4.2. In February, you had an increase of 0.1. Food away from home, you have an increase in 0.3. Food at home, which is nice, stayed kind of stable from month to month at least. And the whole point is the Fed is looking for a 2% increase. And right now on the on the unadjusted basis, we're 3.5. And, my argument, I think I brought this up too, but, I think we're going through major structural changes in this economy, in the demographics that we have. New generations are coming in. I mean, now you're having Gen X starting to look at retirement in the next decade, even now. And I think, I wonder if the traditional way of approaching these kind of problems in the market, or the baselines that the Fed is trying to achieve is maybe needs revision, right? We're pushing down to this 2%. There's nothing written on any stone tablet that says 2% is what needs to happen, right? I think you can see multiple times throughout history where something like a 3.5% is a fine growth, right? I don't know if it indicates, I don't know what it indicates essentially, right? But I don't know, things seem to be sticky. The job market is still extremely strong. There are tons of job openings in the U.S. that need to be filled. And, this gets into weird voodoo territory in the sense that, there's conversation. A lot of young people can't find work at all, and they can't find work that pays well if they do end up finding work. A lot of the things that they were funneled into education-wise, in like computer science, and finance and stuff like that, it's harder for these people to find work. In the same way, you're getting this kind of imbalance where things like, construction and manual labor need to be filled in. With some of the, there are plenty of job openings online, right? But what I've been reading, what I've heard from people in my age group and a little bit older and younger who are looking for stuff is that nobody gets responses back. And so this is, there's this conversation around a lot of these managers putting out job titles, right, or job listings, that aren't legitimate, right? And it's done in a way to try to boost morale in some sense. It sounds bizarre, but it's legitimate. Regardless, you are seeing a strong labor market. You're seeing job openings in things like construction and more manual labor that need to be filled. And I wonder if increasing, unemployment and trying to get down to this 2% growth is maybe a little bit antiquated at this point. I don't know if I'm making sense. I know it's kind of early right now, but anyways, this is what we have right now. I think this is going to lead to maybe a down day. Again, I have been consistently amazed with how things go in this market where you think it's going to go down and it doesn't. Obviously, the last day with real volume, and this is from March 8th, is around this 5,200, 5,100 area. Not 52, but 5,100, 5,120. Right now we're trading 5,181 in the ES. Yeah, NVIDIA is down today. We'll talk a little bit about this when we get back. Folks, stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This portion of the morning market kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. This is Jacob Shoup filling in for Tommy O'Brien. This is the morning market kickoff. We're about 12 minutes out from the open. We're taking a look at NVIDIA right now, trading down just above 2% at 837. About 10% decline from its top. About 974. We say roughly, 974 right here, roughly 950 a piece on the average there. What's the big deal here? Okay, well, I think, in my opinion, one of the biggest issues they're going to run into is what Intel's doing with its Gaudi 3. Up until this point, you had NVIDIA really solidly sitting at the top of creating chips that teach the language models, right? I've gone through with how AMD produces chips that, you can kind of maintain the AIs on. But the H100, which is NVIDIA's big chip, is the one that everyone trains these models on. Well, now the Gaudi 3 from Intel is going to be able to do that, and what they're saying it can do is going to easily rival H100. So this is a major problem for them, right? If what Intel is saying is true. So essentially, so here the company's financial performance has been on a tear in the past year. Reported a 486% jump in non-GAAP earnings per diluted share in the December quarter, citing huge chip demand thanks to the popularity of generative AI models. Stock has come under pressure for the past 2 weeks. Shares are off 10%. We spoke about that. And they're down 1% right now. And here's the thing. I think, obviously I've said that Intel's Gaudi 3 is going to be a major issue. Do I think that that's the reason for, coming off the highs? Not really. I mean, it certainly will play a role going forward in how much the stock can rally up, how many people want to buy it. Obviously, more capital will flow into Intel as well if Gaudi 3 is as good as Intel is saying. But, I think also, too, this stock just rallied so much. And so I think, in a sense, you kind of just get some profit taking at that point. We can take a look at TSM right now. They've won like an 11. It's so insane how much money they won to create some fabrication plants out in Arizona and Texas as well. Let me take a look, waiting for this to load. Essentially the fastest monthly revenue growth since 2022, which is nice. We're up just sideways right now, 145.46. It posted a surge in monthly revenue in March. It cashed in on continuing artificial intelligence boom. March revenue came in about 195.2 billion, and that's in new Taiwan dollars. That's 6.1 billion in USD, up 34.3% year on year, marking the fastest pace of growth since November 2022. The company's first quarter revenue totaled. This is in the new Taiwan dollars, but essentially this is something like, 20 billion. Which is up 16.5% year on year. TSMC is the world's largest semiconductor, of course. And yeah, I want to take a look at AMD real quick. There's no like big news on AMD, but I just want to see what they're doing. Of course, we're still pre-market right now, but I just want to see. Yeah, 166.75. So they're down a little bit, 2.36%. And then let's take a look one more time at Intel. What is it? Give me 1 second. I thought it was INTL, but it's not. INTC, of course, right? So down slightly as well. I think in general this is kind of just more money just flowing out of it for the time being, out of the whole semiconductor. Of course, TSMC is up today, but that's because they had such phenomenal earnings, essentially. All right, so moving forward, one of the things I want to say too is that Google has their Llama 2. They're using Gemini. This is like the general model that Google's training all their AIs off of. And, that uses H100, and it'll be interesting to see if Intel competes with that. Now, this is kind of neat. We can pull up Google right now, 157.22, just down slightly right now. This is really cool, though. So they have the Gemini 1.5 Pro. Okay, so this is kind of like their held model. But check this out. So it can listen now, which is neat, and then transcribe, and then process data at the same time. So like, say we're all sitting here and, maybe you're on some kind of meeting with your work or whatever, you're getting a bunch of figures thrown at you. Gemini is going to sit there and can listen to the whole thing, even like earnings calls, right? Say you want to listen to an earnings call or whatever, so you somehow have access to that. It'll listen to that call, it'll write down all the data, and then depending on what you've told, it will parse out the relevant data and then process that. I mean, I think that's insane. So the updated Gemini 1.5 Pro gives the model ears. Okay, that's cool. And this is also from videos, which this is super neat. And I wonder how this like revolutionizes. Like, I halfway wish I had this when I was in college or something like that. But during its Google Next event, Google also announced it'll make Gemini 1.5 Pro available to the public for the first time through its platform to build AI applications. This is Vertex AI, very neat. But essentially, you just turn it on and it can listen to whatever you're listening to, and again, parse out that proper information. And I can't wait to try this kind of thing. Gemini 1.5 Pro, it's not only a large AI model from Google getting an update, Imagine 2, which is the text-to-image generation model that helps powers Gemini's image generation capabilities. And I wonder, that will be for fun and stuff like that, but think about if you're trying to say I want a house or something like that built this way, I need it in these dimensions, and the plot is this large. And then if it gets good enough in the future to able to actually sketch this kind of stuff up. Anyways, pretty cool. And we'll see. I don't think until it really comes out to the public will Google get to see any cool kind of increase in their market value. All right, let's take a look at Boeing. Some major problems again happening. And I wonder how much of this I would like to find data and I couldn't find it because I was looking for it. But how often, like for instance, okay, we all remember the train tipping over in Ohio. Obviously, that was extremely disastrous. But then for months afterwards, you'd hear new train tipped over, and everyone's like, "What's going on? This is crazy." Well, the thing is that there's no greater frequency in trains tipping over. And so we have a new story out from Boeing today that on a flight, the warning lights came on in the cabin, and everyone was freaked out, and it had to land, right? But I wonder how often that actually does happen. Like, is there an increase in frequency right now of mishaps at Boeing? Obviously, the severity of some of the mishaps is pretty intense. Obviously, we talk about the door flying off, the covering on the engines flying off. But regardless, I wonder how much of this is just press keeping up on what's happening with Boeing. Regardless, the U.S. officials are probing new whistleblower claims against Boeing, and this comes after a flight was grounded. Folks, stay tuned. We'll be right back.
Tigers, we have some exciting news. Live Trading Fridays are here. Join Larry Pesavento every second and fourth Friday of the month, 9 a.m. to noon Eastern Time, as he places short-term trades and gives insights into his strategies. That's right, that means the first Live Trading Fridays event starts this Friday, April 12th. Make sure to sign up so you don't miss the potential for huge gains. If you've attended Larry's stellar webinars before, you'll be familiar with the live trading portion. Live Trading Fridays will be strictly this portion. That's 3 hours of pure trading. All trade positions will be communicated clearly, and all questions will be answered in a timely fashion during these live events. When signing up, make sure to save $50 by using code LARRYLIVE at checkout. This code is valid only for this month, and the discount stays with you for as long as you're a subscriber to the service, so don't delay. Sign up, sit back, and follow Larry Pesavento as he places trades live. See you there, Tigers.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, welcome back, folks. Jacob Shoup filling in for Tommy O'Brien. This is the morning market kickoff. Before we left, we were talking about Boeing. Off about 1% this morning. We were at the market open. The ES off about 1.15%. Russell off about 2.7%. NQ's off about 1.2%. And the Dow futures off about 1%. Gold is trading at $2,343. Silver at $27.79. And copper at $4.26. We're talking about Boeing off 1% right now, trading at 176.66 roughly. There's a new probe going in. essentially one of the engineers said that he had pointed out engine flaws in the 787 and the 777s. So the 787 is the Dreamliner. And there was retaliation against him from Boeing. So he came out. This guy's name is Salapur. He's worked at Boeing, engineer for more than a decade. Alleges that the aircraft maker took shortcuts in the production of the 787 Dreamliner, resulting in sections of fuselages being improperly fastened together. He also alleged witness safety problems in the production of the 777, including cases of workers jumping on misaligned parts to get them to fit together. Wow. So regardless, what this is going to do is have the Senate subcommittee summon Boeing CEO David Calhoun to appear next week to answer questions about the allegations. And I promise you, that's going to be more entertaining than any kind of reality TV we have on right now. I'm definitely looking forward to watching the clips of that. Let's take a look at Microsoft right now. Some good news for them is they're able to get, do I not have the ticker up? Give me a second. They're able to bring World of Warcraft back to China. This was a huge thing that happened, right? Microsoft now owns Activision Blizzard. Activision Blizzard creates things like Call of Duty, World of Warcraft, all this kind of stuff. World of Warcraft had been, just kind of not doing anything for a long time, right? It was losing player base, and in recent times it has blown up, and Activision Blizzard making a ton of money off it. But they're no longer able to operate in China. There's a lot of weird things with that, too. The Chinese government doesn't allow for certain things to be represented in media, and obviously we can all understand that. It's the same everywhere. But they had really particularly, interesting or particular things they really didn't want, right? Like showing bones and stuff like that, or whatever. The point is they're working with NetEase again. This is going to bring World of Warcraft back to the country after a public fallout ended a decade of partnership in 2023. Two companies said in a press release on Wednesday that they are working to bring games developed by Blizzard Entertainment back to China, which is going to be massive. China is obviously a huge market for video games, which is interesting because in a lot of places, they limit how long you can play video games there, which is pretty nuts. I think this is going to be huge for Blizzard. They have a lot of new products coming from the World of Warcraft line that haven't been tapped by China yet. And so I think this is going to result in some pretty good pay for them. We can take a look at Apple as well. Apple is down about 0.75%. They are building a lot or assembling a lot of their stuff out in India now. Apple assembled $14 billion worth of iPhones in India in fiscal 2024. Apple makes as much as 14%, or about 1 in 7 of its marquee devices from India, the report said. Foxconn assembled still nearly 67%. And then Pegatron made about 17% of the India-made iPhones. Winstons Corp plant in southern India state of Karnataka, which the Tata Group took over last year, made the remaining. And this is interesting seeing them shift into it. I'm surprised it took this long to do it, but I think you just have these business deals that get so entrenched for so long that it kind of makes sense that it stays that long. ByteDance, on the other hand, this is going to be, part of Alibaba's holding group that runs TikTok, is doing quite well also, and this is competing with Tencent. One of the things, and this is just kind of food for thought, and doesn't translate because none of these companies, obviously ByteDance, is on the Hong Kong exchange and everything, and Baba obviously is on New York Stock Exchange. That's up about 2% right now. But I want to look at this just kind of like in a general sense, what was Elon Musk doing, right, when he bought Twitter? And the point was, if you look at what these companies over, let's look at ByteDance, let's look at Tencent. Tencent is WeChat, ByteDance has TikTok and all these other kind of things out of Alibaba. And the point is they're making this like one-stop shop for everything. And this is what I think people are really talking about. You've heard this buzzword less and less recently. When they say like Web3, it's you go to this one platform to get everything. And this is what Musk is trying to do by pushing people to publish their shows on on Twitter, and people to come in there, sell their goods. He's trying to emulate what China is doing on their mobile platforms, which I think is interesting. anyways, I just kind of wanted to talk about that quickly because I think it's kind of neat. We spoke yesterday about Ethereum. The revenue skyrockets to 1.2 billion in Q1. That's a 155% year-over-year growth. Let me see here. They're essentially trying to get an Ethereum ETF, just like we've had with Bitcoin, and it seems like the SEC is going to continue to block that, which is a little bit rough, essentially. But in good news for crypto in general, actually, hold on. I'm going to look at Bitcoin quickly because you have a lot of people now talking about when the halving happens, they're going to get a massive decrease. Okay, so right now we're down about 4.3% in Bitcoin. That's trading at 67,674. You have the halving happening on April 20th. And there's a lot of people discussing that you're going to see a major dip beforehand and then a rally up and then a dip afterwards. So right now you're seeing this massive rally in altcoins. Of course, when all these altcoins and their price movement for the most part are going to be pegged against the movement of Bitcoin. Okay. And so when Bitcoin goes down, all these altcoins go down and so on, right? I don't know. I'm interested to see what's happening right here. You have something going on with Coinbase. They had a legal battle with SEC, essentially. Or excuse me, yes, the SEC and the U.S. Court of Appeals in the Second Circuit. This is when this was being, where this is being determined. They were having issues with secondary crypto sales, right? And so they're being sued over it. But we'll talk about this a little bit. One of the top crypto exchanges, Coinbase, has achieved major victory in an ongoing legal battle. The U.S. Court of Appeals ruled in favor of Coinbase, confirming that secondary sales of cryptocurrencies on its platform does not violate the Securities Exchange Act. The court ruling impacts individuals across the country who engaged in token trading on Coinbase between October 8th and 2019. All this stuff is, it impacts people who want to get into it. I want to talk a little bit about what you do if you want to get into something like Bitcoin, okay? And the way that I look at it, and I talk with people that I know as well who are, major bag holders in Bitcoin, and this is the way to do it. If you get on, you've probably heard everything of like Coinbase and all these different kind of platforms. This is fine to buy the asset on, but what I really want to recommend is not keeping everything on that platform, right? You have something called cold storage where you can just move. You look this more up on Google if you're interested, but you can move whatever coin it is off of that platform into a stable wallet. And that is not dependent now on whatever happens to that massive exchange. And this is what we've seen multiple times happen, is you're storing things on the exchange and something happens. Liquidity gets locked up, you can't move your money off, and now we have a big, big issue. So research that if you want to get into it. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Take a look over the screen right here. We have the Tiger Forex Report by Teddy Keckstad. Of course, he goes through every Monday currency pairings. I think it is fantastic. But he also talks about the dollar, crude oil, and kind of whatever else he's looking at. It's pretty interesting, to say the least. You look here every morning, go through DXY, Euro USD, Great British Pound, and then the USD. Anyways, this is a fantastic newsletter, and I enjoy looking through it every Monday. We are joined by Teddy Keckstad. Teddy, how are you doing?
I'm doing great, Jacob. Good morning.
Good morning. Okay, so what are we looking at? I was taking a look at the newsletter on Monday. You're looking at the DXY, you're looking at crude oil, and I actually really like your analysis, and I kind of agree with it. I'm curious what you want to talk about today, and if you can give me insight into what you're looking at least with DXY, crude oil, and some of the currency pairings.
Sure. Well, I think that the key thing to talk about today is the CPI number,
Absolutely.
which is helping to totally influence the currencies, the interest rates right now. And oil is definitely something that's influencing CPI. You know, I mean, oil has been obviously trending higher for over, now for a month, basically. And we hit some very key levels, and we already took out some nice levels already 3 weeks ago. And now that sustainability is probably going to be influencing like CPI for the next 1 to 2 months, I would think at least. And that's if oil just stays where it's at or even pulls back a little bit, and if it goes higher, well, then I think the trend will definitely continue into the summer. And, over a year ago, right before the Fed started, stopping their interest rate hiking, I said, the big economic numbers now are like they used to be years ago. They're very, very important because they're the true numbers that we can guide ourselves by when it comes to the major markets, and especially with inflation, which we know is a big deal. I mean, remember back in the fall, the media and all the pundits and all the geniuses were saying that they were going to start cutting rates maybe by the end of the year, or by now already they would have done at least a quarter point. Well, we know that inflation and, the average person on the street, that they don't need to look at the TV to know that inflation's not going away, and it may not be as parabolic as it was a year and a half ago. That is for sure, but, we wouldn't be able to sustain things doubling and tripling every, 6 months either, So, I mean, like the reality is these things are definitely influencing the dollar. We've had breakouts to the upside, the US dollar yen today, especially with the CPI. I had an upside breakout target of 153.20, and we're trading maybe a half a dollar away from that right now. Excuse me. And that's because of the sell-off in the interest rate market today, which is all because reflective of CPI, and inflation's not going away. We had unemployment that came out very strong last week. We all know that these are numbers that the Fed, they're not going to cut rates with these numbers trending in these directions. And if anything, I wouldn't doubt it if we continue to trend this way with the CPI and the PPI over the next 2 to 3 months. we may get another rate hike before we have a rate cut, and, it's not about me always being contrarian. This is just basic mathematics and being commonsensical. It's not an opinion that I'm getting this off of. There's no bias there. This is just fundamental data, the way that's trending. It's just like higher highs and higher lows is indicative of a bull trend in any market. This is the same difference. You know what I mean?
Right.
So, and as long as that continues, I had a conversation with somebody from the UK, a hedge fund guy, the other day. And we were talking about, when the Fed may or may not react. What's going to do with the BOE and things like that. And even with Japan, they did finally raise rates for the first time in 17 years. Do they like the yen trading where it's at? Absolutely not. But then they're also not obtuse to the fact that oil is driving this. These other factors are driving the interest rate markets globally. And are they going to try and take on that one big beast by just trying to, raise rates?
Right.
That's not going to happen. So is it good for them? Are they happy with where they're at? Absolutely not. But I think that you're going to see some action by them potentially in the next couple of months. But this trend is pretty strong. I would say that if we have another one or two data set numbers, big economic numbers over the next couple of weeks that continue this trend, you can see the dollar index getting up to about 105, 106 even area, even 106.5 over the next probably month, and definitely 3 weeks to 5 weeks, as far as trending. Now, are we going to have sell-offs? Of course we are. Anything that looks to go in the direction that the pundits want it to be, like deflationary or whatever, I think you're going to have exaggerated spikes, but that means that the dollar is in a buy dip pattern. Oil is in a buy dip pattern. I would be careful selling into new highs. I'd be careful buying into new highs, but I would be leaning right now, is for the most part, is that to look into the buy dip, look for nice buying opportunities for the trend,
Right.
So, and I think that there's no real reason to think that unless the Fed comes out and says like, wow, we've had this recent economic data changes everything. But what earth-shattering thing is going to happen? Is unemployment going to all of a sudden shoot up to 5%?
Right.
Is oil going to all of a sudden drop to $40?
Right.
Can it happen? Yeah, but you're looking so far reaching for things to happen to create the situation. It's like, if you want to know the outcome, if you know the outcome, you know the journey, Right. So if we're looking for an outcome like that, what's the journey we would have to take? It's nonsensical. So look at the journey where we are on right now, and you can pretty much know what kind of outcome we're at, to some degree. And I think that's the way you got to look at it. Interest rates, we've set the upper band of how high pricing is going to get in the 30-year and the 10-year, because we've already factored in at least a quarter point to almost a half a point of cuts with no cuts. So there's no way that the most we can maybe do is press the upper range in pricing a little bit more to factor in maybe the potential of a total of 3 cuts, but then that's it, because without them actually cutting, the market's going to drive it back down. So You're in a sell rally forecast for interest rates. You're in a buy dip forecast for oil, the dollar, like the U.S. dollar, Canada, nice explosion to the upside. If you want to give me to give you some numbers, I can give you some numbers. But for the Tiger Forex report, I'm really happy with the way things are going. We're in a range trade sideways market condition. So the swings that we have right now, you have to capitalize on and be nimble. Don't have exacerbated expectations. Am I bullish the dollar? Yeah. Does that mean I want to just get long the dollar and hang on for the next couple of months? No, I want to chip away, because that's the way it's going to be, that kind of a thing. You have to be nimble.
Yeah, absolutely. And, I want to talk with what you're saying, too, with crude oil, at least, right? If you know the end point, you know the journey and all this kind of stuff. But you're right. I think we're continuing to see a kind of environment that is going to push oil higher. You have Saudi Arabia and OPEC in general cutting down production. You have the war with Ukraine and Russia, where Ukraine and Russia, respectively, are targeting each other's refineries. I think this is a massive problem. And then Mexico, as well, is going to start, I think they're reducing it by 33%, the amount of oil that they're exporting. So all of this together, and this is, what I say when I come on and I look at what crude oil is doing, this is going to keep inflation, and I understand it's part of the volatile CPI, but still, this plays in to what the Fed's going to do, whether they lower interest rates, increase them, or keep them stable.
I concur 100%.
Yeah, I think your analysis is awesome, and I enjoyed reading the report Monday. Thank you so much, Teddy.
All right, take care.
Take care now, all right? Guys, again, that was Teddy Keksad of the Tiger Forex Report. Come over here, subscribe. If you're first-time subscribers, 30-day money-back guarantee. Folks, stay tuned. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Let's take a look at the market right now. We're just off about 1.1% in the ES Mini. Russell futures are off about 2.5%, and Qs off about 1%, and then the Dow futures 1.31. Gold is still trading 2,350 roughly, and we are cracking that 105 level like we were talking about earlier in the show in the DXY. Let's talk a little bit about, since we just have a short segment, one of the interesting news articles I saw come out was that you have $1 million homes being pretty standard in larger metro areas, and then mortgage refinance demand surged, even with a 7% rate. So let's take a look. So overall mortgage demand has now moved sideways for 3 straight weeks, but last week we saw a split between those looking to buy a home and those hoping to save money with a refinance. Let me move this over to you so you don't have to look at a DXY chart. Total mortgage application volume increased just 1.1% last week compared with the previous week. According to the Mortgage Bankers Association seasonally adjusted index, the average contract interest rate for the 30-year fixed mortgages with conforming loan balances, increased to 7.9%. 5.01% from 6.91%, with points remaining at 0.59 for loans with a 20% down payment. The mortgage rates moved higher last week as several Federal Reserve officials reiterated a patient posture on rate cuts. And I want to say, too, you had one member say that they might even increase rates, right, or at least mulling over the possibility of that. Inflation remains stubbornly above the Fed's target, and the broader economy continues to show resiliency. Unexpectedly strong employment data released last week further added to the upward pressure on rates. Applications to refinance a home loan jumped 10% for the week and were 4% higher than the same week 1 year ago. Refinance demand usually drops when rates rise, absolutely, but rates had fallen back slightly in the previous weeks, so some homeowners may have been waiting for them to go even lower. When the rates rose last week, they may have been concerned rates would then move even higher and therefore jumped in to get what saves, which is, if true, crazy kind of sentiment you see building in people who are looking to buy homes. And especially at these, increasing $1 million homes in larger metro areas. A pretty good amount of money coming out there, especially if you're doing a 20% down. Folks, thank you so much for joining me today. We have Basil up next. Then we have Steve Rhodes, Larry, and then our man Tom O'Brien on at 3 p.m. Eastern. Thank you very much.